somebody who traverses both the global and the local perspective, one of the larger AIFs and the CEO, Vaibhav Sanghavi of Avendus, joins us right now on the show with his thoughts. Vaibhav, good having you. Thanks much for joining in. Just one quick word on this global scenario as well before we move to a couple of things and a few noises that we're now starting to hear from the government side as well. But do you reckon what's happened on the world side might disrupt India more? Because quite contrary to maybe not the MSCI EM index, but the MSCI Asia Pacific index or others, India has fallen a bit more. Is the pain in the price?
No, I think you're right in the sense that the recent global events are actually, are actually leading the markets to a risk-off mode. Having said that, we need to understand that while we had fallen from about 12,000 Nifty to around about 10,800 or 10,900, we'd already seen that kind of correction. Of course, for different reasons and which are purely local in nature. But in terms of the price performance, we were actually underperforming the whole basket. Now, since the global markets turmoil have started, there is a possibility that in the shorter term, we might be little outperformer. I'm not saying that we would be decoupled, but we may be outperforming should the market fall, especially other emerging market from emerging market standpoint of view. So there is a possibility that our performance may be slightly better. But having said that, on absolute terms, we are still waiting for things to get rectified from the budget perspective, and thus would wait till then.
Okay. The finance minister's reiteration yesterday that they are open to listening into the FPIs and maybe the Economic Affairs Secretary will meet a body of FPIs. FPI and the stock market experts are going to come and meet the FinMin as well. All of that, does it lead to some bit of confidence? Because I've heard more than one expert suggest that one of the key sentiment changers would be when the market believes that the current dispensation is listening in to what the market wants to say. Does all that's happened in the last 24 hours and the comments coming in, do they give you that confidence, Vaibhav?
No, of course, it's a very good positive step in the right direction. So we, as a market participant, we would love to go and express our views to what exactly it's all about. I mean, it's not only about FPI's taxation; it is also about AIF taxation as well. I mean, at the end of it, the common thread being that the trust as a vehicle is taxed. Thus, whether it is an FPI or an AIF category 3 fund, the structure remains the same. So we'd love to go and express our views, but as I said, it is very positive from what the Honorable Finance Minister has mentioned yesterday. And we look forward to seeing a very constructive and a positive solution to this.
Okay, Vaibhav, so in light of that, now my question is, you guys were sitting, I presume, on some bit of gunpowder dry before the election verdict came out. Post that and post the budget, there has been a sharp sell-off. What's your stance currently? Are you still sitting on cash? And if so, would you make use of this 1,000-point fall to deploy that cash? We are back about 11,000, by the way, as we speak, just nudging the 11,000 mark. Would you use this 1,000-point dip to deploy that? Or would you believe that there is some more downside left for the Indian markets fundamentally because of a slowing economy and a slightly worsened global trade scenario?
Yeah, of course. I mean, there are worries in the market, and precisely the reason why the market is at currently at about 11,000. We do believe that a good amount of that kind of negative news has been baked in. But if you ask me that whether there is a catalyst for market to move up immediately, then we will probably wait for the kind of announcements which the government is likely to make on the economic development side, and especially on the AIF and FPI tax as well. So if those kind of things turn out to be positive, then my sense is basically that we might see some quick recovery into the markets. Yes, and that 1,000 fall, we were pretty much light on the book and we think that the levels currently are actually attractive on a valuation perspective. So of course we will start deploying, where we have started deploying some amount of money around these kind of levels.
What would the ideal retail strategy be right now, Vaibhav, if you have to take an approach towards investing in the market and you don't want to sit on cash right now? What should the approach be? And, should there be some sectoral preferences, or, you'd rather just take a look at the stocks which offer value right now, not heavily focused on an individual sector?
No, of course. See, there's always this whole big debate about growth versus value, right? But value, in absence of any catalyst, can continue to remain value for a longer period of time. Thus, India being known for being a growth market, I would purely focus on the growth set of kind of companies. If I'm looking for a longer tenure, like a 3 to 5 year horizon, then of course India as an economy and a market gives tremendous opportunities for somebody to invest in. But if you're looking for a very short term kind of trading stuff, then there are too many variables out there to actually time it appropriately and get it right, to be very honest. So on the immediate short term, things may continue to be turbulent purely because of the global side, but a longer term story of India remains intact and is very attractive.
All right, Vaibhav, we'll leave it at that. Thank you so very much for joining us this afternoon with your thoughts.